Okay, let's go over the trade setup here today, how we get in, how we get out. Here's today's Russell 2000, and we'll go over oil real quick. Okay, it's an $800 move per one contract potential on crude oil, on Russell 2000 that happened. When you see the fib dots come up, first you're going to get your fib dot that pops up, right? It's got to be below the black line, which it will be. You won't get a red fib dot unless it's below the black line. There's your red fib dot. Then you're going to get the arrow. So there's your Fibonacci. There's your arrow. Arrow will tell us that we're in an Elliott wave possible short. But this guy right here will tell us right here. This will tell us this is the triangle that you're going to view in the room this week. The triangle lets you know the supply versus the demand. If I get a red triangle that comes up after the arrow, there's more supply than demand. This exact bar is your order entry bar right here. That's exact bar to enter. There's your entry. What you can do is sell the bid right here. Sell the bid to get into it. I would not do a market order. I'd either sell the bid or sell the ask if you want a better fill. Sometimes a 5 sim Renko will backfill after this closes. If you don't want to miss a trade, just sell the bid on your NinjaTrader platform. Your stop, it cannot close above the black line. A partial body candle close. I like 2/3 of the body candle close above the black line. That'll be your stop out. You'll want to see it immediately go in your direction if it starts going sideways for 3 or 4 minutes or 10 bars past this black bar. If it goes past this black bar, guys, and it has not moved in your direction, I would take a small profit or a small loss. Meaning, if it went sideways and it hasn't moved past this black bar, which is 10 bars, or 3 or 4 minutes, then I would just bail out of the trade. It should immediately go in your direction with my signals. That's how important these signals are. But then you can scale at symmetry dots. The first set, you can bail 50% of your position. Second set, bail 75% of your position. Third set, you can bail 100% of your position, or look for the next market profile. But this is exactly how you enter JSON. It's comprised of 3 important characteristics. Here they are. Fib dot first. Give me my Fibonacci confluence level. Then it gives me my Elliott wave. Elliott wave arrow. 3, my entry is the supply demand triangle, which will show an imbalance for the entry. The market works. I don't care what professional trader you're talking to, if you may know anything about the market. All markets are controlled by supply and demand. Every single market that trades out there is controlled by supply and demand. If anybody tells you different, they don't know what they're talking about. This is a supply and demand market. The more supply you get, you go down. The more demand you get, you go up. The less supply you get, vice versa. Hold on one sec. Bottom line is it's a supply-demand driven market. This triangle will tell you the exact bar entry. This black stop line will tell you the exact level to get out. These symmetry to stop out, partial body candle close, wicks don't count, and these symmetry dots will tell you the exact level to scale your positions. If you're a one contract trader, what I teach traders, very simple, is just trail the high of my 5 sim Renko bar. If you get an order entry bar and you enter, trail the high of that, high of that, high of that, high of that bar, high of that bar. It doesn't close above, doesn't close above it. Wicks don't count. It's got to be a partial body candle close. Doesn't close above it, doesn't close above it, all the way down until right here, it finally closed above it. You had an $800 potential trade right there on the Russell on one contract. One contract produced an $800 move with my J signal. One contract, $800 move. Show me one system that can do that with limited risk. Show me one. I haven't seen any system in the world that can produce that type of move with that type of limited risk. It's gorgeous, okay? If you look at our crude oil trade this morning, on our crude oil trade, we're 1 for 1 on crude oil this morning also. Gerald, you can shut that off? One sec. On our crude oil trade, we're 1 for 1 with trend. Same thing. It's called a motive wave. Our 5-minute trend is up. There's my arrow. There's my fib dot. There's my arrow. There's my order flow bar showing imbalance of orders. There's more demand supply. There's your order entry bar. Cannot close a body candle close. Partial body candle close. 2/3 body candle close below my black line. There's my symmetry dot first scale. Second scale to get out. That's a beautiful move to the upside. And a nice trade, $300 potential there on my move on crude. Same exact setup. We're 1 for 1 on that. If you look at the entire session, we do the same exact thing. We're 2 for 2 in the entire session. Right there was my sell signal. Gave a good move down. That was almost a $400 trade per one contract. Same way yesterday on 2:30 into 1:30 to 2:30 close. I teach traders, you don't need to trade all day long, 7:30 to 10:30 a.m., 1:30 to 2:30. There's your exact order entry. This is another $400 potential trade, another $300 potential trade, another $300 potential trade. They were all exact bar entries with the triangle with overall trend direction or market profile. It's exactly that. Nothing else to do. We got our order, we got our trend filter that tells us where to buy, our bias, and then there's our entry.